we're moving on to our panel session. And I'm going to start this actually with 3 Slido questions. And those questions are going to come up in the context of the discussions with our panel. So those 3 questions are, to what areas does your audit committee allocate the most resources? The second question is, for your specific entity, what is the current level of preparedness with respect to CSRD? And the third is, do you find that attracting suitable candidates to the audit committee is a challenge? And those 3 questions are going to form the 3 themes that we're going to discuss with our panel members today. So I'm going to give you a moment to ponder and hopefully respond to those questions. And while I do that, I'll just move over and sit down and join the panel that we have with us today. I'm delighted. On my immediate left is Yvonne Hill. Yvonne is a very experienced INED and a chartered accountant, you're on the board of AmTrust, on Zurich Life Assurance, on EIB Mortgage and EBS, and have had a long career as an INED, and indeed before that with MetLife. So it's great to have you here. We have John McCarroll. John is Financial Services Audit Partner with Deloitte and over 27 years experience across working in audit and advisory services. We're all feeling old, I should say. Banking audit in particular, and obviously on that basis working very closely with a number of audit committees of listed entities. Then we have Teresa Marhan, and Teresa is audit partner with BDO, head of audit with BDO here. Very experienced is all I'll say, and also global industry lead for technology, media and telecoms for BDO internationally. So great to have you here as well. And delighted to say we're also joined online by Julie O'Neill. Julie, many of you probably know, very experienced NED, currently non-executive chairperson of the Convention Centre Dublin, non-executive director currently at AXA Insurance, AXA Life, Architas, multi-manager, previously a non-executive director at Ryanair PLC, and in an extensive career in the public service, ultimately held the role of Secretary General at the Department of Transport. So huge amount of experience there. So it's fantastic to have all of you here, both real and virtually, for the session this morning. So the first session we're going to cover is around audit committees and risk management. And that ties back to the first Slido question that we posed, which was, to what areas does your audit committee currently allocate the most resources? So if it's possible, maybe just to see if any answers have come through on that yet. Audit-related matters and internal audit matters, risk management are leading the way there. Well ahead actually of financial statement preparation, so audit and internal audit. Cybersecurity is up there, and probably it's a standing item now for many committees. And then regulatory compliance, somewhat of a lag, but I suppose getting the audit done and the financial statements done is obviously for many audit committees going to be front and centre for the work that they carry out. So there are different responsibilities there. There can also be other committees involved, other board committees involved as well. So I suppose the risk there is around bridging those responsibilities between the other audit committees. Maybe Yvonne, if I can ask you first with your experience. So, with respect to risk, maybe specifically financial reporting risk, because you could have a risk committee, but obviously you have an audit committee as well. And how do you ensure that there's an integrated approach within an organisation where you have those cross-cutters?
Yeah, I mean the financial reporting risk. It's an interesting one because the audit committee definitely has clear responsibility for the financial reporting environment, control framework. They review the financial statements, recommend them to the board for approval, but then you have the risk committee, and they're very much looking at the risk of that going right or wrong. And I think where you have big changes, whether that be a process change, implementation of a general ledger or a business transaction, whether that be mergers or acquisitions, the risk of something going wrong is very much heightened. And I think it's very important that the risk committee does not just assume the audit committee is looking at reporting, but brings it into its own space and discussions. I think where you have your chair of your audit committee and chair of the risk committee sitting on each other's committees, that can very much bring a holistic view on how you're managing this. And I also think it's critical that your CRO is attending your audit committees, and usually your CFO will attend risk committees, but also the head of internal audit. And I think for the CROs, it can be very helpful to see the narrative around the audit committee and the concerns that they may have and what comes up through discussions. I mean, outside of the committees, I would work very closely with the chair of risk committees on the boards that I'm on to make sure that the agenda is covering holistically between the two committees everything we need to, but without it being overly choreographed, because then you could stifle some discussion. So that overarching view, taking the agendas together, making sure it's encompassing all change, and not being afraid to discuss risk of reporting at the risk committee is critical. And then both obviously feed up to board. And you'd like to think they're both coming up with the same message.
Okay, so it's a bit of a challenge for chairs there in terms of talking to each other. But
so.
maybe if I come back to you, Yvonne, because I think the challenge that you pointed out was choreography stifling things. And, you know, you can have a list of agendas and this will be there and that'll be there, and how you create the space to make sure that, you know, conversations can flow and things can be more fluid, rather than saying 1, 2, 3, 4, 5, 6, 7 need to be covered and ticked.
Oh, yeah. No, I think that's vital. I mean, that goes up to the board. I mean, the INEDs are coming in with a certain view very often from reading papers, but that's only one view. And if we're both taking a message, that means the chair of the risk committee, chair of audit committee, rightly or wrongly, you don't want to go in with just, this is what I think, full stop. Because management may have a different view and you need to listen to everything. Some people are great at getting papers to committees that are very meaningful, bring out the themes. Some people less so. So it's up to the chairs to make sure that they're asking the right questions, getting right discussions. And personally, I think very often chairs shouldn't be leading all the time with the comments. Let other people around the table go first. And then your role is to, well, has something not been dealt with or asked? And how am I going to bring this back to a conclusion or recommendation? Okay,
very good. Thank you. I think we have Julie back there now. So sorry about that, Julie. I think you were just starting to talk about maybe the role within internal audit in particular.
Can I just check before I start that you can hear me this time, Kevin? Can you hear me clearly? Okay, that's great. Well, first of all, just in relation to the internal audit function, I see it as being a critical part of the third line of defence of the organisation. And I certainly, as my eyes and ears within the organisation, and giving the organisation through very much a risk-based approach in terms of how the audit universe is defined and the scoping of the internal audit programme for the year. And I see that collaboration between which the internal audit function and the risk function works as extremely important. So I'd expect my head of internal audit and the chief risk officer of the organisation to have a very good and close working relationship with one another. And also, and I know Yvonne has touched on this already, that ability to have direct access at all times, from my perspective as chair of the audit committee, to the internal auditor. He or she should always be free to pick up the phone to me, and the way in which we that space at the audit committee when we have closed sessions without management present in the group can really give you a good feeling for the risk culture of the organisation. So certainly that collaboration between the two functions, risk and internal audit, and also, of course, between internal and external audit. We know that external auditors can't rely on the work of internal auditors, but it's always very useful for the external auditors to be present for all parts of the audit committee meetings, so they know the kind of issues that internal auditors are surfacing.
Okay, thanks. And indeed, that whole area of audit committees meeting without management is something that came up earlier this morning as well in Martin's presentation. I suppose maybe turning to auditors then, I might start with you, John, and the kind of role that the auditor can play in assisting the audit committee in understanding and managing financial reporting risk.
Yeah, I mean, I think the first point, and this goes back to the discussion around risk, so I think in a large organisation, a large financial services organisation, that crossover between risk and audit committee is really key, actually, and also understanding the respective responsibilities. So certainly from my perspective, one of the things I do is I actually attend the board risk committee as the external auditor, as an observer. We're not participating, but I find that invaluable, in relation to kind of understanding the kind of breadth of risk across the institution. I think the other comment I'd make is, what we're facing into in the current world, with very significant kind of things coming down the tracks. So, if you take the banking world, the whole inflationary economic piece, right, is really indicating that, financial reporting risk is probably, as we go into this year end, is very much elevated. So no one's seen this level of inflation for 40 years, right? So no one's been through this. And actually, the existing kind of suite of models in both banking and, I'd say, insurance as well, really don't have data points to actually be able to do this. So what does that mean? That means that you're facing into kind of much more judgment and subjectivity, as we go into this year end, and it's evolving by the week, as far as I can see. So what role does the auditor play? In my view, so we'll see the breadth of what's going on, across various industries. So what's really valuable, and I think, that, and particularly in that informal interaction, is, it's that benchmarking. What are others doing? Where do you sit? Where are the weaknesses in the kind of the financial reporting control environment? So, I think that's the bit for me that's key, and, the bit that I think that works.
Yeah, and just on that whole inflation and interest rate and the very new environment, I suppose, that an awful lot of organizations are facing, maybe never faced it in their corporate histories. And that's something indeed that IAASA alluded to in its financial reporting observations document that Lisa referred to earlier on. Maybe Teresa, anything to add on that from your point?
Yeah, I think I would agree with John's points there in relation to the informal communication with the audit committee chairs, particularly on an ongoing basis throughout the year, in terms of to understand maybe what's happening in the business and also what's impacting it. So as we said, we've got the current geopolitical issues, for example, that are currently out there at the moment. But there could be other matters as well that maybe have impacted the organisation, maybe through M&A activity or other matters. And potentially the consideration when you come to financial reporting on those, how you will report on them on that. And actually being a bit of a sounding board, I think, in terms of that communication, I think is really, really important. And it goes back to a little bit of benchmarking, as you've said, but I think that's really, really critical in terms of how it works. I think the other area is as well as in relation to when you're giving the feedback on the financial reporting itself in terms of reviewing annual reports, etc., in terms of being constructive in that feedback as well, in terms of doing it, not just purely looking at it, the pure technical requirements that are there, but in how do you enhance it in terms of a benchmarking perspective. And maybe having those conversations very early on in the process in terms of doing it, kind of considering what was the situation last year's annual report, where can the enhancements can be made, what are regulators giving out as advisory notes in terms of as we go through, what are the hot topics at the moment, how do you improve that? So I think that's very, very important in terms of where it is. And then the final point I'd have would be in relation to, even from an auditor's perspective, when they're doing their own risk assessments, etc., in terms of the conversations you have in audit committees about why those have been addressed and identified as potential risks within it, what potential impact they are, because maybe audit committees maybe haven't fully considered in terms of what could go wrong with those. So I think those are some other factors that can be considered.
That's great, yeah. And again, one of the things that came out of our questionnaire was the amount of engagement now auditors are having with audit committees. It seems to be increasing. It definitely increased since the last time the EU carried out this process. And I think that benefits everybody. That's great. I want to move on maybe then to the second area I want to cover today, which is corporate sustainability preparedness. So we also had a Slido question in relation to this. So what is for your specific entity, what's the current level of preparedness? Early stage planning has commenced, is the clear winner there. I suspect that's covering a multitude of sins, including being here this morning. We have not started to plan for CSRD changes, which is at 30%, and that's probably slightly worrying, bearing in mind some of the timelines that we've talked about. CSRD does not apply to our entity 17%, and I hope you're right. I suppose the one thing you don't want is to be called somewhat unawares, and albeit that it is coming in sort of on a piecemeal basis, it does have a slightly wider scope. So for certain entities, for example, that are not caught by the current disclosure requirements. I think some of those might be coming in. And planning is fully complete is at zero, which I suppose, in fairness, bearing in mind the standards haven't stopped moving yet and the legislation isn't in place, is probably roughly where that should be. But anyway, I mean, obviously early stage planning has commenced is probably where a lot of us are going to be at, and that includes regulators. Maybe, Julie, hopefully I turn to you in relation to this, and what do you see are the key challenges, I suppose maybe for smaller companies, from what you can see anyway, in terms of getting ready for corporate sustainability reporting?
Yeah, I mean, I must say I really enjoyed Ken's presentation earlier this morning. I loved his reference to alphabet soup, because I think that's what we all feel we're dealing with at the moment. We're not entirely sure. We're trying to go after a moving target, and the rules and the guidelines need to be ever changing, ever evolving, and the timelines associated with them. And I have to say that in my case, some of the smaller entities I'm involved with are subsidiaries of a larger group. So that gives you cover in terms of being able to draw on the expertise group level. But I would say for me, one of the most important things is that you start by not seeing this as being a tick box exercise, but seeing it as being part of the wider ESG strategy for your organisation. So I think it's really important not to think of it as just a chore, a job that has to be done, but really think very carefully about what matters for your organisation's perspective, what messages you want to convey to your stakeholders, be those customers or investors or employees or regulators, and what KPIs you're trying to achieve in the broader sense. And you start from that perspective. And then I think you need to try and get a little granular about what the very specific expectations are of your organisation. And, I was struck by that Slido response that some people, maybe this isn't relevant to us. In fact, it's going to be relevant in some way or another to every organisation. And I think this is where, going back to a point just made, to the last question, that you can draw on the support of your external auditors, who have a very good insight on what's going on in the marketplace as it pertains to your particular company or particular sector, and can help you benchmark what it is you do. So for a smaller company, I would say draw on any external expertise you can get, or if you're part of a larger group, draw on group expertise to help you decide what it is you need to do early on and begin to get that right. And I would also say for smaller entities, keep your structure simple. Don't go over elaborate. I noted the discussion earlier, and Ken was saying that, for certain larger entities, PLCs, it may well make sense to have a special dedicated committee focused on these issues. But for smaller entities, it might be about finding out what are the tasks, where them, what belongs to the audit committee, if you have a governance committee or a culture committee, or what belongs to the board proper. Ultimately, the board overall has to maintain oversight of all this and get very, very clear on who's doing what, so that you're satisfied that you're meeting reporting obligations, but against the backdrop of what are we trying to achieve here, what's important, what are our values, what's our mission as an organisation, what are our goals.
Thanks. And yeah, absolutely. Ken had some good comments there. And definitely for smaller companies, that value chain piece is something everybody needs to keep an eye on, because I think that's its own little version of mission creep going on there. But I also know the Commission are looking at that, and they're aware that that's a challenge. I mean, we heard from Ken about larger companies, but I suppose, again, Yvonne, maybe from your perspective, there are similarities. There might be some different challenges as well for larger companies.
Yeah, I think people on the outside looking in think larger companies, you have more resources, you know what you're doing, it'll be great. But after Ken's presentation this morning, I think it's quite clear, especially for publicly listed companies, it's a minefield of what are we going to do, how are we going to do it, and can we get it right? There's huge, where a large company has a geographical footprint that goes beyond one market and go between EU, the US, and the different pace of change, it's going to be very difficult for a big organisation to get everything joined up. And I think that for those companies, especially if they haven't started, it may be beneficial setting up a separate subcommittee that has a very clear mandate from the board as to what it needs to do. And that becomes a mechanism to try and join up people from different functions who may have different priorities and not see ESG or sustainability reporting as something they really need to get involved in. Ultimately, I think a lot about where companies are now and how quickly they're going to get to a very mature ESG environment is around what's driving it. I think Ken mentioned Smurfit Kappa went back to 2005 and Unilever as a provider driving them and asking them questions. I think we have consumers demanding it from companies as well. And I think Ken already touched on the market and what their expectations are. However, there are large companies out there who don't have those pulls at the moment. They have they're privately owned, they have different shareholder expectations, and they are definitely going to be slower to embrace all of this reporting. And it will be very much, well, can we do the basics and can we do it just in time at the very end? And we'll see how that pans out, because that makes it very tricky for audit committees who are tasked with making sure the financial reporting around this is robust and it's appropriate. And I think, again, back to the greenwashing point, if you've got a whole load of KPIs and you're beginning to report out, there's no point just picking the 2 that suit you. If there's another 10 that actually would give a different message from the organisation. And I think audit committees need to be very conscious about the quality of the reporting, what message it's sending, and making sure that they've got that lens across the industry and their peers.
Yeah, I've always felt in relation to this that it's called a reporting directive, but it's really a strategy directive, because it drives so much of, you need to report on your strategy for this, you need to report on your strategy for that. Well, you need a strategy before you can report.
You need a strategy. And if your strategy at the moment has not yet needed to embrace, for various reasons, ESG fully, and different companies, like there's the sustainability reporting is just one part of ESG, and that's the bit where we're not being forced to do it now. Certain companies are going to be a bit behind, even if they're large companies. So the regulation will help drive that.
Okay, very good. Maybe Teresa and John, then, from an auditor perspective, what do you see when you're talking to audit client boards around, the key challenges and maybe advice or key steps you might have for, especially maybe some of those who are in the early stages of planning, as we saw there? Maybe Teresa, if you want to take this one first.
Yeah, absolutely. I think the challenge partially has been down to the fact of a lack of understanding of what's actually involved. And that is partly because of the moving goalposts, as we've all said, in terms of the change in environment. So people are unsure of what's going to be expected of them. So I think that's causing confusion within certain organisations, and potentially cause delays in some organisations in terms of their planning process in relation to it. However, I would say at this point in time, it's actually critical that people get on with it in terms of where it is and work with that changing framework in terms of where it is. But remember, there's all the different aspects to it, because there can be a huge focus on the climate-related elements of it, but we have to look at the social elements of it as well in terms of the reporting that comes into there. I think the issue as well is in relation to the availability of information, readily available information within organisations, i.e. how easy is it to gather it, the part of the systems that they have, the whole area with the value chain, because it's not just the organisation itself, it's wider than that. And I don't think people necessarily think beyond that in terms of where it is. So I see that's some of the bigger challenges that people have with regards to it. And they're actually not sure who it applies to as well, because the directive obviously is starting off in terms of the public interest entities, etc. But then we're obviously looking at large private companies as well coming into the remit on this, subsidiaries in terms of, because of the from a geographical perspective, etc. So there's a lot of issues from that point of view. I think for those companies that are probably behind the curve in terms of where it is, I'd say is prioritise. You need to put this on your agenda. I think you need to look at getting a team involved in terms of individuals or a subcommittee, whatever that form is appropriate for your organisation in terms of to look at it and assess the requirements that are currently there and perform gap analysis in terms of actually where do we, our positives and our negatives, going back to earlier on, the discussion from Ken, in terms of that's really important, and to kind of consider both in terms of where it is and actually try to create an action plan from there with its milestones in terms of what you have to do against the deliverable dates. And I think that's the key things in terms of from my point of view.
Okay. Get moving. John, anything from you?
Yeah, maybe in relation to behind the curve, and I apologize in advance for a plug, but we did the Deloitte survey of audit committees, in relation to kind of assessing climate change, and a few key points coming out of that. So 42% said they didn't feel their organization's response was as swift and robust as they'd like. 50% felt they weren't climate literate. 70% said they had not completed a comprehensive climate challenge. Only 18% said the impact is reflected in their financial statements. So, the main challenges, I think, were lack of clear strategy and poor quality of data. So I think the message is, if you feel behind the curve, you're probably consistent with the majority of people. So what to do? I think it is, as Julie said, get it on the agenda as quickly as possible. Understand stakeholder expectations, and these are rapidly changing. What does it mean for the business? And I think one of the reasons why people really, are struggling to grapple with this is like, this is going to be a genuine cost. Okay, there's opportunities, but there's going to be, across the economy and for businesses, there's going to be a huge cost associated with this, and that's something that's kind of hard to get your head around. Gaps in data, and data is a particular issue. Management information and controls, big problems. So looking at that. Another key point really is around who owns this in the organization, and I think there can be a lot of debate, particularly even at committee level. Does it sit with the audit committee? Is there various responsibilities across the committee? So understanding the governance and the ownership, right? That's absolutely key. Make sure audit committee members get climate literate. And really that this is a fundamental decision around the business strategy as we move forward. It's going to be fundamental to the business. So it was interesting, I talk about complexity. I was looking at the kind of EU taxonomy, and if you think about the level of complexity, it covers 72 activities, 6 environmental objectives, and 2,500 data points. So that is, and it's changing all the time. So but actually with that complexity, the tools in the marketplace that are kind of starting to come out, to be able to help people with actually compliance with this, is that's starting. So I happened to see a presentation from a JV startup last week called Greenamy, and their piece is they have a platform that takes the taxonomy, talks to the data sets within companies, and actually tries to kind of make it efficient. So tools are starting to evolve. And even if we look at the banking world, there's another startup that's looking at the whole physical risk around houses. And again, that's a massive data issue in terms of kind of banks grappling with modeling mortgage books. So help is coming, right? But there is, it is very complex.
Yeah, and if you think about 1 January 2024 and having to get 2,500 data points, and it's probably even a procurement challenge for many organisations to get everything in place by then. Okay, that's hopefully food for thought for everybody here. The next area I want to cover is an area that's probably close to everybody's heart at the moment, which is retention, recruitment, skill sets, future-proofing of boards. And we actually did have a third question on Slido, which was, do you find that attracting suitable candidates to audit committees is a challenge? So the leader there is, we've encountered some challenge in attracting suitable candidates. We've only encountered some challenges at the moment. Significant challenges. It's good to see they're not hugely significant, but 1 in 5 are encountering significant challenges in attracting suitable candidates. And it's not actually too far short of that, the 17% who aren't encountering any challenges. So I think the majority, some challenges is probably fair enough, and take a little bit of comfort from the fact that it's not a situation where everybody is absolutely scrambling at the moment. But maybe, Teresa, if I can start with you, maybe from an auditor perspective. So you're looking within BDO at a number of different audit committees. So in your experience, all that's being asked of audit committees and the sort of people that they're trying to get onto audit committees, I mean, do you think the skill levels, are they improving? Are they staying the same? Are they disimproving, and why so?
I would say in general, I think that they're improving in relation to the skill levels that I'm seeing in audit committees. And the reason is that I think that for a lot of people actually taking on the roles on audit committees at this point in time, they're actually investing the time initially to determine what the responsibilities are going to be and educating themselves. There's a lot more information also available out there to people right now in terms of continuous education, in terms of what's expected in relation to it. So I think that's important in relation to it. I'm seeing a greater degree of questioning from audit committees than we probably would have in the past, and sometimes some would have been relatively passive in terms of their nature. But I think the demands in terms of even from regulators, etc., out there has meant that they are asking those questions a lot more in terms of where it is, which is a good thing in terms of doing it. I think good two-way conversation is very, very important in any process in relation to it. However, I think I see the challenge is actually getting enough people for audit committees as we go forward. Because there's more and more audit committees, but is there enough appropriate candidates out there in the marketplace in relation to it? Is there people out there willing to take on that responsibility, the time commitments that are involved, because it's getting more onerous? And depending on the involvement of that particular audit committee in terms of the rules that they do, because we talked today about the fact of I think one of your earlier Slido questionnaires said they felt the balance was right in terms of what they were doing. However, but if you go forward and you bring in the CSRD directive, potential other changes to come down the road, is there a question, and where does that sit within organisations depending on the size of it? Is that potentially the level of work that people are going to be asked to do? Is that going to be something that's going to put them off in relation to doing the role? So I think that's something to be considered.
Okay. It's good to hear, though, that audit committees are, once people are putting their hand up to get on it, they're being more robust in terms of the work that they do. Yvonne, your experience, easier, harder to get people to come on?
I think there is, a number of things that make it difficult to get the right people on an audit committee as well as the board. I mean, Teresa mentioned skill set, and that's a very important one. I think it's always helpful to have accountants on audit committees where they have a deep history in financial reporting. They're used to internal and external audits. They're used to being involved with or know what a good control environment looks like. So the bread and butter of audit committees, I think, it's critical. So that skill set is definitely required by some, if not all, of the audit committee members. What's interesting about that, and I noticed Teresa just mentioned about audit committee members looking to make sure they have the right skill set. I think that at the moment, everything moves so quick. It's easy for an audit committee member to be relevant, to have the right skills this year, but are they the same in 3 years? And certainly for me, one of the challenges I make myself every year is, how am I keeping relevant? Is the board training I'm getting from each of my companies enough, or do I need to supplement it? So that's critical. But I mean, other two items that I think are out there, certainly for regulated companies, the CBI have strict requirements around how many companies can you regulate, and that will rule out people automatically unless they're willing to change, the boards that they're on. And finally, I think conflicts of interest is an interesting one. There can be genuine conflicts of interest that prohibit a person taking on another board role. However, there can be perceived conflicts of interest, in particular with larger companies who maybe they have a footprint, from a local Irish point of view, you might be fine, there's no conflict of interest, but where two groups maybe overlap in other countries or product lines outside of your subsidiary, that perception of a conflict can hinder you taking on roles. So it's tricky, and it's difficult even as an INED to manage, to make sure you have that right fit and make sure you're always aware of potential conflicts of interest and highlight them if they do occur.
Okay. Perhaps are we running into maybe a bit of a small pool problem, do you think? Or is it just making sure that when you have people that they fit afterwards?
I think for regulated entities,
okay.
And in particular, if you to say, well, insurance or banking, I think you can get down to a small pool. And I think that's where companies need to be open to looking to different pools,
okay.
To move across. So you have an overarching skill set that is transferable to different industries. And it's important that the board and audit committee and risk committee look at the committees in the round and don't get hung up about one individual, but in the round, does this make sense? Are we covering everything we need?
Okay, very good. Julie, have you had similar experience to Yvonne?
Yes, indeed. And I think First challenge is to try and recruit people onto the board in the first instance, and that's becoming increasingly challenging these days. And I think we have to give a lot of thought on every board to the kind of board skills matrix we have in place, so that we look in the round skill set we need across the board to be able to meet the needs of all the committees. I think it's particularly challenging in the financial services sector because of some of the issues that Yvonne has mentioned, and also the introduction of the C regime is simply going to make it just that bit more demanding, and will have people stop and think yet again before they take on roles on financial services boards. I agree that we need to broaden the pool we're looking for. We're inclined to maybe think a little bit narrowly around the kind of technical skills we need in board members, whereas I like to see a lot of thought given to the softer skills that we need board members to ensure our boards are effective. And I'm talking about the emotional intelligence and broader life and business experience that they bring to the role. So if you take up all that in the round, I would always start from, has the board got a very clearly defined skills matrix of what it's looking for? Is it thinking in terms of succession planning? Is it looking at who's coming on and who's going off the board over time, and how we backfill? And I think Yvonne made a very good point there. It's not just about the skills we think we need now. Like, we've all been scrambling recently to say, have we got people on the board who fully understand cybersecurity, IT type challenges, for instance? Obviously, the whole ESG agenda has come to the fore in recent times. So what I would try to do is not ensure that everybody who comes on board has all the skills they might possibly need at the outset, but that you have a good, robust training programme and continuous professional development programme in place that can support directors as they fulfil different roles. And specifically in relation to the audit committee, I don't think it's essential that every member of the audit committee is an accountant, or in the case of, say, the insurance sector, an actuary, for instance. I'm not an accountant by background, but I would have deep financial services experience from my experience. So it's to get that mix and ensure that you've one or two really proficient technical people on your audit committee, but also others that bring broader financial and business experience to the table. And as I say, that you support that and underpin that with the kind of training that you might need in very specific areas as they emerge over time.
Very good. Maybe outside of board recruitment, then looking more broadly, do you see any skills shortages in organisations, Yvonne, that have an impact on audit committees?
Yeah, I mean, with the audit committees, I mean, one of the key groups that we come into interaction with is your internal audit function. And I think every business area at the moment is challenged around resources. It's hard to get people into companies. Retention can be a challenge as well. And that's the same for internal audit departments. At the moment, with the pace of change, I think data analytical skills, again, is important for the how internal audit departments do their work and what they can do in the future. Those data analytical skills are critical, but they're also critical to every other area of the business. So how does internal audit team cope with that? Where I think internal audit, where they are lucky in some ways, they do have the ability to co-source and use external providers. So somebody could come in and supplement their audit team on the ground, or they may outsource a particular audit completely where there's a specialist skill that they don't have. I see that a lot in insurance, where an internal audit team might go out to actuaries and get them to come in and help. So, but it's interesting, and again, it's like Julie mentioned, it's all about, what is your internal audit function going to look like in 3 years' time? How am I going to get there? And it's important that the audit committee start challenging the internal audit function around that and keep that forward looking. Am I getting the right quality and audits done from the team?
Okay, very good. Definitely looking to the future, especially with the employment market that we're in. We need to plan over the medium to long term. Julie, in terms of skill shortages then, do you see any specific challenges, maybe specific to smaller organisations and also specific to larger ones?
Yeah, I mean, I would agree with the point that it's a very hot employment market, and not just in the audit area, but also in the risk and actuarial and other related areas at the moment. That can make it quite challenging to attract and to retain people. And I would have found, particularly in smaller organisations historically, that people might have perceived internal audit as a bit of, employees might have perceived it as potentially a bit of a backwater, that you might go in there and you might get stuck there. Whereas in small organisations, I would always encourage people, if they had an opportunity and we're looking at career development opportunities, to spend some time in internal audit, because I think it is probably the most effective way of getting an insight into the broader workings of an organisation. So in small organisations, I would tend to look over time at some mobility in and out of the internal audit function. And as Yvonne has said, drawing on co-sourced or outsourced supports for some of the more technical audits where it may not be possible to develop a capability within the organisation. In larger organisations, what I see working extremely well is the development of centres of excellence, perhaps at group level, supporting individual subsidiaries. For instance, whether it's in data analytics or whether it's in IT audits or in other specialist audits, it can be really, really powerful if you have a small core group of people that are very strong and well-developed skills and can provide extremely robust internal audits on some of those more technical areas. The other thing, though, I find is in larger organisations, if I can have an in-house internal audit function, I prefer to have that, because back to the point I made in answer to the very first question, I find that an in-house internal audit function, which is robustly independent of the other executive functions within the organisation, which builds a very good, where the head of internal audit and his team build a very good, effective working relationship with the CEO and the executive team, can really work as an extremely powerful eyes and ears within the organisation, and really can kind of get into the underbelly of what the culture is like. And I find those one-to-one conversations I have with my head of internal audit absolutely invaluable in telling me what's really going down in an organisation, what really are the issues, where they're getting positive responses, where they're maybe getting less positive responses, what they feel are the real core issues that need to be addressed in terms. So taking all that in the round, invest in a good internal audit function. The larger your organisation, that needs to be in-house. But also try and sell it within the organisation as really good career development opportunities to individuals who spend part of their career there.
And in fact, you're not the first person who I've heard that from, in terms of that spending a period of your career in internal audit allows you to travel throughout an organisation and really get a sense of what it does, and can very often be a passport to greater things.
I've seen. Sorry, maybe just to finish that point, if I may. I've seen people very successful from head of internal audit to chief risk officer, for instance, and I think that can be a really good sideway move at times for individuals, and indeed vice versa.
Absolutely, very good. Thanks, Julie. John, maybe we've talked about the need for expanding skill sets and, you know, the attractiveness, or potentially not, of filling in some of these roles. But in terms of where financial reporting is going, and we've talked a lot about this, what do you think is the biggest mindset change that's going to be needed for members of the audit committee?
Yeah, you know, and as you said, you know, being on an audit committee, particularly in a regulated financial services world, you know, it's very challenging. You know, there's so much out there in terms of regulation, the environment. You know, I guess it can feel overwhelming. You know, but you know, in my experience, like the audit committee, you know, that mindset of the audit committee adding huge amounts of value. You know, I think that's an important mindset. So what's that mean? Helping steer the organisation, you know, through that complexity and through that uncertainty. That sounding board for management, the C-suite, you know, where you can provide them challenge but also support. You know, I think that's an important mindset. You know, I think successful organizations, particularly in the current world, will be resilient. So, you know, the audit committee, I think, has a role there, particularly in relation to, you know, is resilience embedded in the organization. And I think for financial reporting, and, you know, we talked about this earlier, you know, it's very much not business as usual. You know, and things are evolving rapidly, and the current environment will involve a lot in relation to kind of the judgments and estimates. And I think it's, you know, it's important for the audit committee to be sort of feel that they're confident and from a technical perspective and other perspectives to be able to deal with that. But it's not just financial reporting, it is that strategy and direction. I think the comment at the start was my 27 years. I was kind of reflecting on that as, it doesn't feel like that long, but I think in those 27 years, there's been good kind of ups and downs and challenges. And I think, the challenging ones are the ones I learned from and they're most rewarding. And I think that's the same for an audit committee member, that mindset of the huge value that they can add.
Yeah. I think what I'm hearing is an audit committee needs skill sets in the round. I mean, asking one person to tick all these boxes, well, if you get them, hold on to them. But I think the reality is it's a variety of skills and areas of expertise. And again, as Julie said, they don't all have to be audit and accounting. There are all sorts of other skills that are going to be important there. But as we've heard repeatedly, it's that communication piece and regular communication and communication skills that I think that are going to be core to this. I'm just going to turn it over now to maybe questions and answers. So again, if there's any questions in the room, you can raise your hands, and some questions have come in on Slido. Just the first question that's come in is around where does the Sustainability Committee sit in the sort of committee ecosystem? I don't know, Yvonne, if you want to capture that. So could it be a subset of the Audit Committee or does it have to sit parallel or somewhere else? Do you have any views?
Yeah, I mean, I think when you're setting up committees, you need to have a look from the board down in the round. Does it make sense? For me, I probably wouldn't put it as a subset of the Audit Committee. It's certainly not initially. I think where something is critical to an organisation, so say if you say sustainability is going to be part of my strategy, I think you need to get it on the board agenda and it needs to be a separate committee, ideally reporting into the board so it doesn't get lost. And I think that can be very important at an implementation stage, especially. Then possibly you could move it around a bit. But at the moment, I probably wouldn't. This sustainability is beyond the Audit Committee. It goes beyond just the reporting. And that would be why I wouldn't probably.
Yeah. And I think we've heard a lot that there's a whole strategy piece to this and everything which really exists sort of beyond the scope of the Audit Committee, if I can put it that way, and probably at board level. A question for auditors. So John or Teresa can leap onto this one, which is if you're focusing on giving advice for an audit committee as to how they integrate ESG into their day-to-day activities, and we've seen the long list that they have already. What do you think the audit committee's key focus areas should be now? Again, bearing in mind this is a huge thing to grab, I suppose. What should the audit committee focus on? I mean, maybe John, if you want to.
Yeah, I'll take that. I mean, for me, it's three things. One is kind of there's a path to compliance. So there's lots of different milestones on a forward-looking basis. So it's kind of having a plan around that. That's the first one. Second one is, as back to the earlier discussion, that there's a huge data lift on this. And so, that whole piece of what's happening with the data remediation, data, improvement, data and management information, that sits on that foundation is really key. And then the last one is reporting, and Ken mentioned earlier around that's, the evolvement of the annual report, the front part and the back part, the consistency of those, and, obviously the consistency of the statements and the factual accuracy stroke non-greenwashing consistency of the statements that are actually being made in the front part. And, I think those are probably the three key areas for me. Okay. And maybe tying into Barry's presentation, I think if we move into a digital environment, linking these things might be a little bit more easy rather than perhaps the pages 28 to 45 approach, which we have had until now. I just want to check if anybody in the room here today physically wants to ask a question, but there's one more question in relation to audit committee members, and maybe Julie, this question is around what plans a committee might have to upskill its members in relation to CS or D. Are any committees that you're on, do they have specific plans to actually upskill members, or is it more keep your eyes and ears open?
No, we would, first of all, yes, we would have specific plans, is the short answer to that question. We would start from developing some training around what the implications are. And actually, in the case of one or two entities I'm involved with, we're drawing immediately on the support of our own external auditors and helping us develop that training plan. And not just targeted at audit committee members. I think it's important, it's back to a point Yvonne made a few moments ago, this as narrowly being audit committee, but something that the whole board need to choose. So that's the first thing. The second thing that we're doing is we're having an internal audit carried out as part of the internal audit plan for next year to assess where we stand vis-a-vis requirements for compliance. And I think that in itself, while obviously it's an important part of the internal audit programme, is also going to be a very good learning exercise for the members of the audit committee and for the wider board, what comes out of that audit. And thirdly, then we're looking at what other external sources there might be of training and education. For instance, I'm a member of Chapter Zero Ireland, which is focused on independent non-executive director community in terms of what its role will be in relation specifically to climate change and all that goes with that. And through that and through other initiatives, I would imagine that there are quite a number of training and other resources made available over the coming year. We'll be tapping into that and encouraging individual members to take part in that. And then just finally, in the case of IAASA, where I'm a member of a number of boards, IAASA have actually developed a very strong climate training programme, which has been available to all staff right across IAASA worldwide, including to directors, including non-executive directors. And that can be a really powerful tool in terms of upskilling. So a multifaceted approach, I'd say, is needed.
Yeah, I think the key message there is it's not just about audit committees, is it? It's about the entire, starting with the board and really all the way through. Listen, we have run out of time. I want to thank everybody who joined us here today. I hope everybody here in the room and everybody online has found that really useful. But I want to join you in giving a round of applause to Yvonne, John, Teresa, and of course Julie. So thank you.